Good evening. This evening, I'm going to solve problems, discuss solutions to problems P2-8 and the very long problem in the chapter. That's so far the last problem in the chapter 2-17-R. Okay, so let's now begin with 2-8. A requirement number one, prepare journal entries for each of the transactions. So we have now the corporation uses job order cost system, a partial list of the accounts being maintained by the company with their balances as of September 1 follows. So we have cash, materials, work in process, accounts payable credit, and factory overhead. The following transactions were completed during September, and we are going to prepare general journal entries for each of these as required by number one. So A, materials purchases on account during the month 58,000. So we debit to materials and credit to accounts payable. Then letter B, materials requisition during the month. Direct materials for 45,000, indirect materials 8,000. So our entry is to debit work in process for direct materials, debit of factory overhead for indirect materials, and credit to materials. Letter C, direct materials returned by factory to storeroom during the month. So our entry now is to reverse entry B in connection with direct materials returned. So we now debit two materials and to credit work in process. Letter D, materials returned to vendors during the month prior to payment is in connection with entry letter A. So we have to reverse debit to accounts payable and credit materials only for 1,500 and payment to vendors for 51,500. So we now debit to accounts payable and credit to cash. Now, as required by number two, post the general journal entries to the accounts. But before we post the journal entries for the month of September, now let's begin by posting the beginning balances. So the beginning balance of cash, debit 64,250. Debit balance of materials 23,500 post. Then debit balance of work in process, debit of 31,000. Accounts payable credit balance is 29,000. And the factory overhead, there is no beginning balance. Now, posting the journal entries during the month. So we begin with letter A, debit to materials. So letter A, debit materials and credit to accounts payable and credit to accounts payable. Then we now debit to entry letter B is to debit for materials requisition. Debit to work in process. So debit to work in process. Letter B, 45,000. Debit factory overhead by 8,000 and credit to materials 53,000. Then we go to letter C. The entry is to debit materials for 900. So debit materials 900 and credit to work in process. Letter C for 900. Then letter D, debit accounts payable 1,500 and credit to materials for 1,500. And letter E, debit to accounts payable 51,500 and credit to cash. Requirement 3, balance the accounts and report the balances as of September 30. So for cash, we have debit 64 to 50 minus credit to 51 500. The balance of cash, which is a debit, is 12,750. Then for materials, we have the debits total of 82,400. The sum of 23,500 plus 58,900. So 82,400 for the debit. The credits are 53,000 and 1,500. So the total credit of 54 500. So we have now the balance of materials is a debit of 27,900. Then for work in process, total debit of 76,000 minus 900. So the balance is a debit of 75,100. Accounts payable has a credit total of 87,000 and a debit total of 53,000. So accounts payable has a credit balance of 34,000. So finally, for the balances of cash, 12,750, materials 27,900, and accounts payable for 34,000. Now, don't worry, I will be posting the solution, what I have discussed. I will have the solution posted before, no, or after. And then we move on to 27. We have now problem 2-17. That's R. Okay? Hindi na nga mo lang hanay, no? Sunsog po ng kanon ang isa. Ang kalina. Na-record na ha. Ba't yan ay? Here you can find the solution which I already discussed. So now it's already being screen shared. So you can just copy it or have a picture in relation to the three requirements. So the three requirements, I'm recording this in continuation to the previous. So, okay, we have now requirement one, the journal entries. Then number two, we have the posting to the T accounts. And number three, we are asked for the balances of the three items. Then after this, we move on to 2-17-R. 2-17-R. Okay? Okay. So we have this so far, the longest problem. Actually, this is already a review for chapters 1 and 2. So with 6 requirements. Again, I'm going to have this screen shared. Let's begin with requirement number 1. We have to set up the accounts and enter the balances as of October 1. So we have now the balances in 2-17-R, and after entering the balances, then we are going to post as required in number 2. We are going to prepare journal entries and then post the journal entries to the accounts. Number 4, we prepare statement of cost of goods manufactured for October, and we have prepare an income statement, and the last is a balance sheet. Okay, so we now have the following accounts as required. We are going to begin posting, okay, in requirement numbers 1 and 3. So first, we are going to post the following balances. On October 1, we have cash balance debit of 12,000. So we have now your cash balance. So we write balance 12,000, and then work in process, again, a debit balance of 35,000. Then for materials, here we have a debit balance of 51,000, followed by prepaid insurance. So there we have a balance of 3,000, and then machinery sa debit of 125,000, accumulated depreciation, a credit balance of 10,500, office equipment, a debit balance of 30,000, accumulated depreciation, office equipment, a credit of 4,800. Then we have office furniture. Here we have a debit of 20,000 and accumulated depreciation of 2,500, a credit. Then accounts payable 182,200. Now we have accounts payable here for 182,000 200. No, accounts payable is 30,000. Okay, accounts payable credit of 30,000. Then, capital stock 182,200, a credit, and retained earnings a credit of 46,000. Now, these are your beginning balances as of the month of October. Then second requirement, we have to prepare the journal entry to record each of these transactions. So for the journal entries, in letter A, we have the payroll. Okay, so number 2 requirement, letter A, for the payroll recorded during the month, direct labor is 28,000, and indirect labor 4,800. So the entry is to debit work in process for direct labor, factory overhead for indirect labor, and we credit to payroll for 32,800. Then letter B, indirect materials purchased for cash. We now debit to materials and credit to cash. Letter C, materials purchased on account chain. £4,000, 8,800. Police, 2,000 sets, 10,200, and steel plates for 5,000 units at 3,000. So for letter C, we now debit two materials for a total of 22,000. Now that's taken by adding 8,800 plus 10,200 plus 3,000. So debit to materials 22,000 and credit to accounts payable. Then also in letter D, sales on account, debit to accounts receivable and credit to sales. Then letter E, accounts receivable collected, we now debit to cash and credit to accounts receivable. Then in letter F, materials used during October using FIFO costing. So we now have 14,000 pounds of chain, 4,400 sets of pulleys and bolts and tabs, 4,000 pounds steel plates, 3,800 units. Now for the debit to work in process for direct materials and the credit to materials. Now, since we are using FIFO costing, take note of the beginning inventory chain, 12,000 pounds at total cost of 24,000, but total materials used chain is 14,000 pounds. So during the month of October, the company bought 4,000 pounds, but only 2,000 are used in October because the total number of pounds of chain is 14,000. So using the FIFO method, we get the 2,000 pounds from the October purchase. So the unit cost is 2.20. The beginning is 2. Dividing 24,000 by 12,000. So it's 2. And during the month, total number of pounds of chain is 4,000. The total cost of 8,800. So that's 2 pesos and 20 centavos. And only 2,000 pounds are used in October. So we now get 4,400 for the 2,000 pounds. Adding this to 24,000, the total cost of materials chain using the FIFO method is 28,400. Now for pulleys, total number of sets used for pulleys is 4,400. We have a beginning inventory for pulleys for 4,000 sets. Total cost of 20,000. It means 5 per set. So meaning all the beginning inventory of pulleys were used during October because the total number of sets of pulleys used was 4,400. So the 400 sets are taken from the 2,000 sets of pulleys bought during the month of October. The company bought 10,200 dollars worth of pulleys for 2,000 sets. For 2,000 sets. So it means that the cost per set is 5.10. That's taken by dividing $10,200 by 2,000 sets. Again, we are using the FIFO method. It means that of the total number of sets of pulleys bought during October for a total cost of 10,200. Only 400 were used during the month of October. So again, the cost of 5.10. The total cost of materials pulley used during October is 22,040 using the FIFO method. Next, we have four materials, bolts and tops. Used was a total of 4,000 pounds. So bolts and tops for the beginning inventory, we have 10,000 pounds for a total cost of 5,000. So 10,000 pounds, a total cost of 5,000, meaning it's 5,000 divided by 10,000 pounds. It means 50 cents per pound. Of the materials bolts, we have now the total number used for bolts and tops is only 4,000 pounds. So in other words, it's only part of the beginning inventory. Multiplying it by 50 cents. So the total cost is 2,000. Actually, during the month of October, were no purchases of these bolts and tops. Now, another material used is steel plates. Used is 3,800 units, and this only came from the beginning inventory. Beginning inventory of uh, 400 or 4,000 units, total cost of 2,000, meaning the cost per unit is 50 cents. So used during the month of October as part of materials used is 3,800 units of steel plates at a unit cost of 50 cents. So no deduction from the steel plates purchased during the month since the company used the FIFO method. So in letter F, the total cost of materials used is 54,340. In letter G, the payroll paid 32,800. In letter G, debit to payroll paid for 32,800 and credit to cash. Now again, take note that in letter A, payroll recorded during the month that was to distribute. But in letter A, that's payroll distribution, where you are going to debit part of the payroll to work in process and part to factory overhead. In letter J, you have the payment. In letter H, indirect materials issued to production is 650. So in letter H, we again debit to factory overhead 650 and credit to materials for 650. I factory heat, light, and power cost for October 3,000 and it's not yet paid. So letter I, we debit to factory overhead for 3,000 and credit to accounts payable. Letter J, office salaries paid for 6,000. We now debit to selling and administrative expense for office salaries. Actually, office salaries is an administrative expense, but we just combine this in selling and administrative expense. So we now debit selling and administrative expense for 6,000. Then letter K, advertising paid 2,000 We now debit also selling and administrative expense. Actually, your advertising cost is selling expense. So we are only combining selling and administrative expense. So letter K, there was payment. Then letter L, accounts payable paid. We now debit to letter L, debit to accounts payable and credit to cash. M, expired insurance on office equipment 100, on factory machinery 300. So in letter M, we debit to selling and administrative expense for the insurance on office equipment. This is actually an administrative expense. So we debit 100. Debit factory overhead for the expired insurance on factory machinery and credit to prepaid insurance. So for letter M. Then letter N, we debit to factory overhead, credit to cash for factory rent paid. Letter O, depreciation on office equipment for 400. On office furniture, 180. On machinery, 1,200. So our entry now is to debit selling and administrative expense, 580. Then we debit to factory overhead, this now depreciation on machinery 1,200 and credit accumulated depreciation on office equipment 400, credit accumulated depreciation on office furniture 180 and credit accumulated depreciation on machinery. Now, letter P, factory overhead charge to jobs, debit to work in process, and credit to factory overhead, being a manufacturing cost element. So we have the third debit to work in process. Then in letter Q, we have now the debit to work in process given data. Work in process on October 31. October 31 is 31,000. Hint, the difference between the sum of the beginning balance in work in process plus the total charges to it during the period less the ending balance in work in process represents the cost of goods completed or manufactured during the period. So we now debit to finished goods and credit to work in process. Now we will find this amount in the T account for work in process. Cost of goods sold during the month 84 250. Now we go back to requirement number 3. We post the journal entries to the accounts, setting up any new ledger accounts necessary. Only controlling accounts are to be maintained. However, show the calculation for the cost of materials used. So we now go back to the T accounts and post the entries to the T accounts. Okay, so we now post the entries to the T accounts by having our entries T accounts after the beginning balances. So refer to the T accounts in requirement number 1. We have the T accounts here for first we have the given T accounts for the beginning balances of the accounts shown in our problem, including cash, work in process. So there we have cash. So the beginning balance of cash is equal to 12,000. Okay, and as well as the other balances. Now we pause, we debit to work in process. Actually, we have the letters coded in order to show debit to work in process 28,000. Then we debit to finish, no, factory overhead. We debit to factory overhead in the amount of 4,800. Debit to factory overhead in the amount of 4,800. It's there. Factory overhead 4,800, and then credit to payroll. Okay, now take note that in the T accounts we have the corresponding letters, the debits and the credits. So just take note of this. T accounts, trace the journal entries in requirement number 2. So just like your first journal entry, debit to work in process, and then you debit to factory overhead and credit to payroll. Now all of these are already posted. And finally, you are going to get the ending balances. So if you have your debit and the credit, you find the difference. The balance at the end should be placed on the side with a bigger total. So like for example, your accounts payable, the credit total of accounts payable is 55,000. The debit total is 33,750. In other words, you have the credit bigger than the debit. So the balance is written on the credit side. It's 21,250. Now, these are your T accounts after posting the journal entries. So you have now your T accounts posted, and finally determine the ending balances. Then in number 4 requirement, after we extract the balances, now we have your balances, and we prepare a statement of cost of goods manufactured. We prepare a statement of cost of goods manufactured for October. And then, okay, now we go to requirement number 4. Requirement number 4 is a statement of cost of goods manufactured. So we now begin with materials. Inventory on October 1. So you look at your materials account. You have your inventory on October 1. Then we add the purchases of materials. Actually, you have this posted in the materials account. You have now your purchases. In here, you have the amount recorded, and you will find the amounts included here for purchases 23,000. Then we have the total cost of materials available for use, and we deduct the inventory on October 31. Now the inventory balance on October 31, it's the amount that you find in your materials account. You will find your balance, no? The credit balance of materials equal to 19,010. So the cost materials used is 54,990. We deduct the indirect materials used. So you are given your amount of indirect materials used. The balance is your cost of materials used in production of 54,340. And then we add direct labor and factory overhead. So both of these are debited to the work in process account. So total, we add the work in process inventory October 1, and we get the total, deduct the work in process inventory on 1st October 1, we add October 31, we deduct. So the difference is the cost of goods manufactured of 98,290. Requirement number 5, we have to prepare an income statement. Prepare an income statement. So the income statement now is uh, taken also from your balances in the T accounts. So for the income statement, we have to start with net sales. You can find that in your sales account. Then we deduct cost of goods sold, finished goods inventory. October 1 is 0. Add cost of goods manufactured in the statement of cost of goods manufactured. Total goods available for sale, then we deduct the finished goods inventory October 31. The difference is your cost of goods sold deducted from your net sales. So we have the difference as gross profit on sales, then deduct the selling and administrative expenses. We have the net income. So finally, the last requirement in the problem is a balance sheet. So we have now the balance sheet with assets, including cash that you can find in the T accounts. Then we have the accounts receivable, then the inventories, finished goods, work in process, and materials. By the way, in the listing of your inventories, you have to list finished goods first. We arrange the inventory accounts in the order of liquidity. So in the order of liquidity, the most liquid among the inventories is finished goods, no? In other words, we have this finished goods already ready for sale, whereas the materials inventory, you still need it, you still need to produce and convert it to finished goods. So meaning finished goods first and then work in process and materials. So we have now your total current assets, including prepaid insurance. Then we have the fixed assets, plant and equipment, minus the accumulated depreciation. You have the net book value of 113,300. Then the office equipment less accumulated depreciation. And the office furniture less accumulated depreciation. So finally, we have the net fixed assets, total assets of 282,895. Then for liabilities, we have the current liabilities, including accounts payable. Then stockholders' equity includes capital stock, 182, 200. Then retained earnings beginning, 46,000. We add net income for October. We now get the total retained earnings by October 30. 1. There are no dividends declared. So we have now your total stockholders' equity, and then we add the liabilities. Total liabilities and stockholders' equity equals the total assets. Okay, so we have the problem for 17-R. Please take note of the postings to the T accounts. You are just following your journal entries. Now we go to the last two cases in the chapter. This is in connection with the JIT system. Now, when I had the PowerPoint presentation, mention was made that about the JIT system, that the JIT system is applicable if your supplier is near. So what will happen is before production begins, now you can just call the supplier to deliver the materials. So in other words, you are not going to store the materials in the warehouse, but you can just request the materials directly from the supplier when you are about to produce or manufacture. So I mentioned that this JIT system is applicable to cases when the supplier is near, but it cannot apply to supplies or to materials which are where when the suppliers are far, especially if you are referring to imported materials when you really need to maintain a warehouse. Okay, now let's take up mini case number 1, financial and non-financial aspects of changing to JIT. IntelliTalk manufactures smartphones. It's considering the implementation of a JIT system. Cost to reconfigure the production line will amount to $200,000 annually. Estimated benefits from the change to JIT are as follows. The quality advantages of JIT should reduce current rework costs of $300,000 by 25%. Material storage, handling, and insurance costs of $250,000 would be reduced by an estimated 40%, and the average inventory is expected to decline by 300,000 units, and the carrying cost per unit is 35 cents. Now we have to understand that if you adopt the JIT system, you will have a reduction of the inventory in the warehouse because, as mentioned, the inventory or the materials that will be used in production will come directly from the supplier. So, requirements number 1, what is the estimated financial advantage or disadvantage of changing to a JIT system? Okay, so we have now the savings from implementing the JIT system. First, we have the reduction in rework cost equal to 300,000 by 25%. So the reduction in rework cost amounts to 75,000. Reduction in storage and handling, the material storage, handling, and insurance cost of 250,000 would be reduced by an estimated 40%. So you have 100,000. Then savings and carrying cost equal to 300,000 units. times 35 cents per unit. So that's for 105,000. Total savings of 280,000, but you have an increase in change overs cost in the amount of cost to reconfigure the production line will amount to 200,000 annually. So you have now the net advantage of the JIT system is 80,000. The non-financial advantages are anticipated improvement in product quality due to suppliers, no, materials that will be delivered outright upon request. So meaning the materials are really new to the extent that there are no spoilages or obsolescence in connection with these new materials. So frees up factory space for other uses. The non-financial disadvantages are interruptions in material supplies or strike by their own workers, resulting in lost sales. When you have no material supplies, then you cannot rely on the suppliers. If ever the supplier has problems with the workforce, then you will not be having supplies of materials that may end up with lost production in your case. Difficulty of workers to master JIT process. Now, to the extent that if you are adopting JIT for a first time, however, as you continue using it, then the workers will already adapt the new system. Then second requirement or the second problem for mini case number 2, changing from a traditional system to JIT system. In the scenario on page 98, CR Industries was trying to decide whether to change from a traditional inventory system to a just-in-time system. The president, Bruce Phillips, wanted to know whether this change would merely affect how goods were ordered and produced, or if it would also impact the financial health of the company, as well as the accounting system itself. The controller, Joanna Boto, was asked to prepare a report estimating any expected cost savings and changes to the accounting system resulting from a move to JIT. So if you have to refer to the scenario, we are given the scenario on page 98. So let's go to this page and find out what really is the scenario for this. So we now have your page 98 showing recall just in time materials control. So it states refer to the scenario on page 98, CR Industries. So you have now CR Industries. How do you consider this? CR Industries is trying to decide whether to change from a traditional inventory system to a just-in-time system. The president, Bruce Phillips, wants to know whether this change merely will affect how goods are ordered and produced, or if it will also impact the financial health of the company, as well as the accounting system itself. The controller, Joanna Boto, is preparing a report estimating any expected cost savings and changes to the accounting system resulting from a move to JIT. Okay, question number one. What cost should be affected by the introduction of the JIT system? 2. Should Philips customers reap any benefits from the change to JIT? And 3. Will Boto have to make any changes in the way that inventory is accounted for under a JIT system? Now, inventory carrying costs such as storage space for raw materials, security insurance, and spoilage and obsolescence should be reduced by a JIT system. Also, a JIT system can reduce non-value added production activities such as moving materials and work in process, storage of work in process and finished goods, and inspection of work in process. Now, earlier I have discussed a non-value added activity. So, like storing the materials in the warehouse, it will not increase the value of materials. So you simply keep the materials there while waiting for request by the production department. However, storing the materials may involve losses, losses and even obsolescence. So we can say that storing is actually considered as a non-value added activity. The same with transferring the materials from the storeroom to the place of production. That is also a non-value added activity, and even inspection. Now, in number two requirement, should the customers reap any benefits from the change? Yes, the benefits to Philips customers would include increased customer satisfaction due to quicker delivery, decreased cost of products due to some of the savings in carrying costs and production costs being passed on to the consumer, and higher quality products due to quality control techniques being practiced at the time an individual unit is produced. Now, the fact that if you are adopting the JIT system, ordering the materials directly from the supplier's place to be delivered to your place of production, meaning you are not going to maintain the inventory in the warehouse or in the storeroom. So it will minimize carrying cost. Since it will minimize carrying costs, naturally, the company, the production department will also involve a reduction in total cost since your carrying cost in connection with your materials inventory will be reduced. Thus, the total production cost will also be reduced. So that will be a positive effect to the customers. Then number three, will Boto here is a controller, have to make any changes in the way that inventory is accounted for? Yes, inventory should not be accounted for using the traditional job costing techniques. Products move through the system so rapidly in a JIT environment that it would not be cost effective to track production costs to them while in process. For example, a row and in process inventory account may replace the materials account, and the work in process and finished goods accounts may disappear in a backflash costing system, which is adaptable also under the JIT system. Okay, the rest of the problems I assigned, we are going to take up in class. Yeah.